And I actually think maybe this election, the donkey could win because certainly when I analyse Australian politics, I really don't feel like we have too many great leaders at the moment. Welcome to the Urban Property Investor. I'm your host, Sam Saggers, here to help you crack the code of real estate wealth. Today, we are code cracking the federal election. Yes, the election looms next weekend. And of course, both major parties have policies. Today, I thought it worthwhile to dissect some of the policies and really shed some light on what you may or may not be voting for. So welcome back, regulars. Play the program in double speed, get your life back. And of course, all the episodes I've done are lessons on real estate, albeit after today's show, maybe I'll have to change that little intro line because I don't think today is really a lesson on real estate. Today is simply information around what the election is all about when it comes to property. What are the policies behind the major parties? Let's leave out some of the smaller parties because we know some of them are socialists and don't necessarily want any of us to actually even, be capitalists and have jobs and build economic backbones. Some parties are pretty loose, so let's leave the loose ones out. And of course, if none of this resonates with you, if you don't find a policy which you like, you can always vote for the donkey. Yes, here in Australia, donkey voting is a big thing. And I actually think maybe this election, the donkey could win because certainly when I analyse Australian politics, I really don't feel like we have too many great leaders at the moment. And of course, the statesmen of yesteryear are no longer. We simply, as it would seem, come up with some pretty bizarre policies at the best of times here in Australia. And really, when I analyse the election and certainly the major parties' policies, I don't really see too much there that inspires really a future of a world where property becomes more affordable and policy is aligned with that. No, I see more fire economy. What is the fire economy? The fire economy, of course, is that Australia's backbone is run by finance, insurance, and real estate. And really how that all links together is today, Australia's super funds control 34% of the stock market. They are financially engineering success through the stock market. You've got, for example, the Commonwealth Bank of Australia, who this month alone became the world's most expensive bank stock in the history of the world. How a small little backwater like Australia at the bottom of the earth with a fairly small population base has the most expensive bank stock in the world blows everyone's mind. But of course, when you're financially engineering your country to increase demand, put more people into your population and sell housing, you obviously get a very well-priced bank stock. And of course, the Commonwealth Bank of Australia broke all records in April, becoming the world's most expensive bank stock. It's always got new customers. It's always got new ability to create loans and financially engineer this country. So the government, of course, is part of the fire economy. They love the idea that we bring more people here, start more coffee shops, sell more houses, sell more student positions in our universities, and increase our productivity, participation, and population to grow our GDP. That is really the economic model of Australia. And really, when you analyse both the coalitions and Liberal parties' ideas around what next for Australian property, it is really more of the same. Let's bring more people here. Let's build a bigger society. And of course, let's make sure real estate is a bedrock of the financial system. So the Australian Labor Party would like to help over 100,000 new first home buyers into the market. How that's going to happen, no one really knows, but it's a big statement. Obviously, the Help to Buy schemes that the Labor Party is financially engineering is designed to help people get into the market, to co-invest with government, to take advantages of free handouts, and get on that property ladder. And of course, that will increase demand. No, it won't necessarily fix supply, which is obviously the biggest challenge in Australian real estate today is how do you produce more stock? The cost to produce stock is expensive. The ability for developers to make things stack up financially is almost impossible at the moment. So we have a real supply shortage of stock. The Australian Labor Party, the ALP, has really not really done much to fix that. They've gone in the opposite direction. Let's throw more buyers into the buying pool. And just maybe that will encourage developers to take more financial risk and bring more stock through the system. So if you look at some of the supply figures, I mean, it just doesn't add up. You simply couldn't produce that amount of real estate for the first home buyer market to absorb. So that's the ALP's plan. That's their major policy. And of course, the coalition has really come up with an interesting one, the tax deductions for home buyers. Yes, you can effectively basically write off your mortgage costs if you are a first home buyer and you have a certain threshold of income. You're in a certain tax bracket of 37%, and the first $650,000 of your annual mortgage can be deducted. And so you can deduct the interest costs. Let's say it's 6.1% interest rate. You know, that's $15,460 per annum. And you can do that over the first 5 years. So it's around a $75,000, I guess, saving for households. So save through tax deductions. And again, the cost of living crisis is a big conversation. People can't afford stuff. And so that technique is really helping people afford to come into the housing market. But it really doesn't fix the supply issue. It ultimately just, I guess, creates buoyancy and stability around the financial system by effectively government giving tax relief to home buyers, first home buyers, to come into the marketplace. So it would create a level of stability, a level of people not selling real estate. They would come into the property scene and hold on for that 5 years. So certainly from a property investment perspective, both policies will drive higher prices. And again, depends on where you sit on the political spectrum. Do you want higher prices on your current property portfolio? Do you want higher prices because you've got to still build a property portfolio? Certainly what I can see from these two major policies is that there really is just a structural shift towards helping the first home buyer marketplace come into the electorate. And of course, there's a lot of millennials, a lot of Gen Zs that feel kind of sidelined from the property market. They feel a bit sad that they're not property owners at this point. And of course, some of these policies, if you like, are a bit of a grab for younger Australians to effectively choose a political party that they may end up following for life. So, of course, the first home buyer market has always been policy driven, but really this is where both parties are putting a lot of weight into young Australians getting into the property market. And we've seen that. We've seen Peter Dutton's kids out on building sites saying how hard it is to get into the property market. They can't do it. Peter won't give them any money to help them onto the ladder. And of course, this is some of the policy narrative around both policies. But if we dig even a little bit further, let's start with the Labor Party. The Labor Party is offering effectively a $10 billion investment program, working with state governments to provide an extra 100,000 dwellings exclusively for the first home buyer market. Now, remember, the Labor Party also put out a policy, 1.2 million well-located properties over a 5-year period in Australia, and has been doing its best to encourage state governments and local councils to get on with it. Obviously, that's not on track. So to add another 100,000 to a policy which has previously been implemented through the first term of government, taking another $100,000, 100,000 homes and creating them is kind of like creating fairy dust, because you haven't really created the ones you set out to create in the beginning, and now you're just adding to that. But hey, the $10 billion investment program is designed for first home buyers to basically either co-invest with government or to take advantage of grants and get into the marketplace. And one could argue it's probably never been easier to actually get into the Australian property market if you have a reasonable job. The fact that government is willing to throw large amounts of money at the problem of people leaving the rental pool and becoming home buyers is obviously music to the ears of the Commonwealth Bank, which can see 100,000 new possible opportunities in their pipeline. But certainly when it comes to whether the stock can be delivered, that's really the real challenge, which is kind of ignored in this policy. It's just basically we'll give people money, and if the properties are there or not, it's not really our problem. So that's really one of the big policy, I guess, announcements. And of course, the removal of income and placement caps for home buyer schemes, effectively. So it previously sat at 200,000 and there was 50,000 places. So price caps will be raised as high as 1.5 million in Sydney. And there'll be more places effectively. So a lot of people can get into the property market on a 5% deposit backed by government and avoid lenders' mortgage insurance. Now, again, putting Australians into a high, loan to value ratio situation is what it is. It's a good opportunity for first home buyers to get into the market. So potentially, if I was a first home buyer, I would be looking at this Labor Party policy and going, well, it's pretty good for me. Might jump on board on that. Might get myself a property with 30 grand and just try and work out what next. So, these opportunities are a way to get into the property ladder. So certainly not to be dismissed if you're young and you're a first home buyer. This could be a great policy for you. And of course, the Labor Party has confirmed, further rounds of funding for their $10 billion Housing Future Fund. They've implemented a ban on foreign buyers purchasing existing dwellings for 2 years from the 1st of April. And there are some exemptions for permanent residents and New Zealand citizens, which are effectively permanent residents of Australia. But what they have said is foreign buyers, you're not welcome. Don't bring your capital here. You're banned. You're banned for the existing property marketplace. So there's not a lot of foreign investment at the moment anyway. And again, removing that is kind of a bit of just politics. It's kind of a moot point. It's been removed because there's very high taxes on foreign investment. And most foreign investors aren't really shopping in a first home buyer section of the market if they are trying to deploy capital and bring money from overseas into Australia. The Labor Party, though, will introduce a $10,000 bonus for apprentices who work in resi construction. So if you are an apprentice and you basically take up a job as a construction worker, you can get a $10,000 bonus. Now, Australia has a problem. They have no construction workers, so you can't build anything. So let's say you're a apprentice carpenter and you're sort of just working at a home, renovation company, and you're thinking of leaving the trade, so to speak. All of a sudden, you've got a $10,000 bonus if you start to work in residential construction. And so you might sort of stick around. You might go into new construction and start building some houses around Australia. That funding is set aside for 60,000 basically apprentices. So it might actually even inspire you to become an apprentice. And of course, that's paid over installments over a 5-year period. So $2,000 per annum might sort of inspire you to sort of leave school, do a trade, and take up some work in residential construction. So that would be a good policy. I think we need more construction workers. So maybe I won't vote for the donkey. Maybe I'll vote for that policy. I think it's got some legs around it. And of course, some other minor policies, just creating a national licensing scheme for electricians. It's very difficult for them to go from state to state. Australia loves state-based licensing. It's one of the annoyances of my life. If it becomes very difficult to do business in certain states, even though you're licensed in one state, it's difficult to do business in other states. So you have to go back and apply for mutual recognition and even do courses just to meet state standards. So creating a national licensing scheme for electricians may help electricians actually migrate to places that need more trades. And the release of a $170 million funding package for from the National Productivity Fund to aid the uptake of methods of construction like modular homes. So, we could all be living in prefabricated modular homes soon to deal with the affordability crisis. But there's a little bit of research and development funding going to the construction of modular homes. So that's interesting. So that's really the policy of the Labor Party. Will you be voting for that, or will you choose the donkey? I'll let you be the decision maker. Now, let's go to the coalition's policies. Firstly, obviously, the deductibility scheme around first home buyers who earn a certain level of income on a certain tax rate, and they can claim, call it $15,000 a year from a $650,000 part of their mortgage. So that's based on effectively the mortgage costs on a, say, 6.1% home loan. So that would put more money in their back pocket, probably make them feel safer getting into the market, because for the first 5 years of their mortgage, they can basically get a boost, a $15,000 a year boost. So again, as a first home buyer, that's not a bad policy as well. I actually don't think it's bad whatsoever if you fit into that right sort of income profile of that policy. So it's individuals up to $175,000 income earners, or basically joint applicants who earn $250,000 or less. You can use that 15 grand to get into the marketplace. Now, again, it probably depends on whether you've got a bit of a deposit or you don't as a first home buyer. If you've got a deposit, perhaps the coalition policy is a better one. If you don't have a deposit, if you've got nothing, you can't become a capitalist if you've got no capital, so you might prefer the Labor Party's program. Mind you, both won't fix the problem of future property values going up, because as you can see, neither the Labor Party major policy nor the Liberal Party major policy fix the supply side issue. It fixes the demand side issue. It creates more demand. And the interesting thing for property investors is that the first home buyer market tends to also shop at the same price point as investors. So they tend to compete with each other. A lot of the time, first home buyers are, sub-$1 million purchases. And of course, a lot of the time, investors are sub-$1 million purchases. So you could see a lot of growth in the bottom end of the real estate market off the back of these policies. Certainly the Labor Party policy, if 100,000 basically homes are set aside for first home buyers to come through the system and flow into, that's going to push up the bottom end of the market without question. And of course, you layer that onto some of the demand-led policies of state governments, like free stamp duty. You could have a lot of demand coming into the market. And of course, that's a lot more loans for the fire economy, a lot more real estate loans for the fire economy. And really, that's the Australian economy, is more people, more loans, and more, property activation. And I might sound bitter when I explain it like that, but I'm not. I'm just explaining it. That's the system. So if you're sitting and listening and you're going, wow, that system's so rigged, yes, it's rigged for people who get onto the property ladder. And again, from what I can see from this particular sets of policies, this is about getting people onto the property ladder. And of course, that in itself is part of the narrative. More construction workers working on housing, more loans being created, more investment, more financial engineering. So the coalition has also created a policy around a $5 billion housing infrastructure program, which will be delivering, which is designed to deliver key enabling infrastructure such as water, power, and sewerage to unlock 500,000 homes. Now, this policy is actually quite an important policy because it is something that is completely broken in new development. You can have a very good development site that stacks up, that will provide housing to Australians, but it may be, 600 meters from power, sewerage, water mains, and the basically infrastructure providers basically can't get to the job in an appropriate period of time, and or will pass on a lot of the cost to the developer to basically reach the sewerage lines and the power mains and things like that. And really, government is putting a lot of pressure on private developers to pay for these problems. That actually there is an under-amenitized level of infrastructure in Australia to actually build houses, to build properties. And of course, this makes a lot of developments actually not stack up financially. It means that developers have to walk away from sites, and when sites come to market, they're not actually bought because of the infrastructure challenges the sites pose, that the infrastructure can be huge. And of course, the delays on getting water, power, and sewerage are horrendous at the moment. And this slows up the velocity of stock coming through the system. And again, it means a developer is stuck on a site for 3 years instead of 2. If they were on the site for 2 years, they might buy another site and you would get velocity going. So I would say this particular piece of legislation is actually an important piece of legislation. And actually, as I talk through this, maybe this piece of legislation will stop me voting for the donkey. Maybe I'll vote for this piece of legislation. I think it could unlock a level of supply in Australia which could create affordability. But again, I'm a property investor, and do I really want affordability? I don't know. It's something that wakes me up at night. Do we want more affordable housing as property investors? Look, I'm all for capital growth, but I think sustainable capital growth is better because generally when things aren't sustainable, they end up blowing up a tad. And of course, I think potentially unlocking that delivery of new detached housing through a $5 billion housing infrastructure program could be certainly a good thing for producing stock. It's probably the one policy that is all about unlocking supply. Certainly the Labor Party's $10,000 bonus is helpful because, you're unlocking supply, but then you don't have the builders. This is the real challenge. So, potentially the coalition and the Labor Party, if they blended those two policies, they actually talked to each other or chose the best of each other's policies, you would say if you wanted affordability, if that was actually your goal, the $5 billion housing infrastructure program is probably a good thing, and getting more trades as builders is a good thing as well. I think both of those things are needed to keep up with the population intake here in Australia. And of course, I've lost my train of thought, but let's keep going. All right. The next policy is the super home buyer scheme by the coalition. Wow. Take 50 grand out of your super and go buy a home. Again, the Labor Party is obviously trying to financially engineer government, and mortgage insurers to sort of free up that so you can keep your super. Coalition is basically open to the idea that, hey, it's your money. Like, you need it now, not when you're 68 years of age. So let's get you moving. Let's give you your money, free up 50 grand, get you into the market. And as we free up that super money for you, you can also do your first home buyer mortgage deductibility. So that's their policy. Get more people into the market. Again, that's very demand-led side policy. It's obviously you're just going to bring more competition for investors. So if you are an investor, I would suggest to get investing, because what is seemingly going to happen no matter who wins next weekend is there could be a lot of younger people who shop at the same price as investors coming into the marketplace, which is going to happen. So the coalition also is looking to end the Australian Future Housing Fund, scrapping the Help to Buy scheme and remove tax concessions to the build-to-rent sector. Why would they be doing that? I believe, they just don't see the idea that socialism should be a thing in Australia, that, we should not reward, I guess, entrepreneurialism through small property investors. I guess they would look at ending and scrapping that as potentially redeploying their money, the money that is going into that, into some of their other ideas. They will implement, or they want to implement, a 2-year ban on foreign investors and temporary residents purchasing existing dwellings. Again, they've just matched the Labor Party policy, which really is a policy of nothing, because there really is not a large intake of foreign investors buying established properties anyway. The coalition will freeze the National Construction Code for the next 10 years, preventing any further changes during this period. So what does that mean? Well, Australia's got a net zero goal by 2050 to basically be carbon neutral. And as part of that situation, the National Construction Code over the next 10 years is all about basically improving the sustainability of housing. And to improve the sustainability of housing, which is a big carbon emitter, you have to build new housing under a 7-star construction code rating. And of course, every couple of years it ratchets up. And so what it does when you create more sustainability concepts around housing, it increases the price it costs to build a house. And of course, by freezing the National Construction Code for the next 10 years, it will soften the cost to build a brand new home. It'll basically leave it where it is today. You won't see inflation based on basically the construction code changes over the next 10 years. And I actually don't think this is a bad policy. I mean, I'm a big advocate for sustainable houses, but we're at a pretty good level where we're at the moment. And given the cost pressure on suppliers to supply properties to the market, I think, that's not a bad policy to actually consider as a policy. It would serve certainly, ensuring that we're sustainable at the moment, but we're not pushing things to a breaking point where really, the cost of building a new home is out of reach of everyone because of sustainability guidelines around the construction code. I think the current sustainability guidelines are pretty good, so they will help anyway with where the world needs to go by 2050 net zero. But, adding more layers to that is probably at this point something that can be deferred. So that's not a bad one. The next coalition policy is working with financial regulators to lower the serviceability buffer for mortgage applications. So this is about basically cutting out, the excess servicing from getting a loan. And of course, the idea would mean that instead of someone going to their bank and their bank going, well, the current interest rate is 6%, we apply a 3% buffer above that should the rates go up, so that you're not putting in a financial vice, removing that 3% buffer. So instead of being serviced on a 9 or an 8% buffer when you're borrowing money on 6%, basically the coalition would put pressure on the regulator to remove the serviceability buffer for mortgage applications. So obviously that would free up buying power. That would free up loan ability to get into the marketplace. It would have a big impact on the property market. It would mean people could borrow more money, more leverage would come into the marketplace. It would mean people could financially probably reach the property number they need to reach through. The only challenge with it is, of course, if people run into financial hardship because rates go up, inflation rears up, and all of a sudden you have the adverse effect of it, of lots of Australians unable to meet their property commitments. As a policy, I'll let you be the judge of that, but certainly it would free up basically a lot of people to buy properties. Would it free up supply? Again, questionable, but certainly it may encourage developers to develop if they know that there's buyers at the other end who can service what they are creating. And right now, if you analyze the development market, it's gone away from a lot of properties which are designed around people getting into the market for the first time. Those 2-bedroom apartments, 1-bedroom apartments, they're becoming extinct. And really, developers are now developing 3 and 4-bedroom product to the all-cash downsizer market, as opposed to the struggling to keep up market at the bottom because of servicing. So maybe it would change the typology of what developers try and bring to market, because they would feel that people can afford the products that need to be produced. The coalition creation of 400-person target, a creation of a 400-person target for apprentices and trainees in training for construction and labour skills. So basically, they are going to throw out a bit of a jobs campaign for up to 400,000 people to become trainees in the construction and basically that section of the marketplace. So Australia needs more people. It certainly doesn't need more knowledge workers. It really needs more apprentices and more people who can work as a tradie. So, that's a policy that certainly could probably help with tackling future supply. Obviously, it's going to take years and years and years to train that labour force to provide the supply, but it probably addresses a long-term challenge that Australia has, that it just does not have a level of construction workers in the system. Will 400,000 people over, basically a government term, coming into the system. That means we might have that labor force by 2027, 2028, 2029, 2030 to deal with this problem that's not going away. And finally, the coalition has a target to reduce overseas migration and introducing a cap of 240,000 student commencements. And again, the way Australia's run is migration, I guess, is a function of treasury. You have a mathematical equation of what and how many people you need to put into your economy to stimulate growth, stimulate more consumption, can stimulate more spending. And so the coalition has recognized that, maybe we've overstimulated the economy. If you're going to put 500,000 people here every single year and you're not going to produce enough housing, you're just going to run into a long-term property price problem. So they're really the two policies side by side. Do you prefer the coalition policy? Do you think that basically helping first home buyers get a tax deduction and money back in their pocket, the idea of the $5 billion infrastructure fund to connect water and sewerage to new supply? Do you think letting people have their super is a good idea? Do you think that really a freeze on the construction code is a good idea? Do you think that creating 400,000 apprenticeships is a good idea and slowing down international migration and student migration? Do you think that's all a good idea for your property investment portfolio? If you do, maybe you should throw a vote to the coalition. As for the Labor Party, if you like the idea of the Australian Future Housing Fund to be continued, to build more properties, more social housing, more build-to-rent housing, then you might want to look at the Labor Party. Obviously, they've earmarked 100,000 new dwellings to be exclusive for first home buyers. So if that rocks your boat, you might vote for the Labor Party. And of course, it's all about low deposits, getting in with little to no money. So if you got no money, you might vote for the Labor Party because, if you are interested in getting into the property market, they're certainly doing some pretty low deposit stuff at the moment, which, might help you get started. So they're really the policies. And of course, the other policy is just voting for the donkey and looking after your own world in this world. And there's something to be said for that. Just, the fact that a lot of people rely on government to run their world, quite often scares me. Take control of your own world. That's the best way to live your life. And really policy-wise, you are the main policy in your world. So work on yourself, educate yourself, take chances, get involved in real estate, meetup groups, and you'll meet the right people and you'll end up doing really well out of the real estate world. But there's some policies there to consider. Hope that was helpful. Good luck with your vote. Get out there and let's see what you can do for Australian property. The Labor Party, the Liberal Party, or the donkey. That's it from me. Let's talk soon. Thanks for tuning in to the Urban Property Investor. If you enjoyed the episode, make sure to subscribe on your favorite podcast platform or YouTube so you never miss an episode. I'd love for you to rate the show and share it with your family and friends. Let's spread the word about property investing. Stay connected between episodes on Facebook, Instagram, and LinkedIn. And check out the rest of our podcast network at positivementor.com.au. And if you're serious about growing your property portfolio, don't miss our complimentary Property Investor Nights. Register now via the link in the show notes. See you next time.